Now I want to talk a little bit about some of the month-end or year-end closing procedures that need to be performed each time that you're going to close the month or close the year. Now, the normal looking at your open invoice reports and applying all payments is a daily or at least minimally a weekly assignment that you do. You assign all those payments. But now there are situations in which you receive money for customers before the job had been completed. And when they come into QuickBooks, they come in as a negative receivable. So if you were to run an accounts receivable report in QuickBooks, it will be off the amount of the negative amounts that you received because it's going to reduce your true accounts receivables by that as a negative number. These first two are probably prepayments that you haven't completed the job, or it's an indication that you haven't closed the RO and CCC1 yet or your management system. So all those things are important to look at. But now I want to talk about the procedure that you use at the end of the month. Now this is now set to the October 31st, last day of the month. And we have this payment here that was paid at $7,377.54. Now we can verify that into CCC by simply going to that repair order and actually seeing that it hasn't been closed yet. Now, as I said earlier, that if it's an indication that the repair order hasn't closed, as this one hasn't, as you can see the work file, it hasn't been closed yet, but this job hasn't been done yet either. It hasn't left the building. So if it hasn't left the building, it shouldn't be closed. But as soon as it has been left the building, it should be closed. Now, in this case, we're at the end of the month, and this job is not going to be done by the end of the month. So we have a prepayment that's going to exist from this month, and it's going to be available for payment in QuickBooks when the invoice gets closed in the following month, or hopefully it will be done in the following month. So what we need to do, and we've created a memorized transaction for this, is to transfer it temporarily to customer deposits so that way it doesn't affect the accounts receivable and it's not a actual payment for a job because you haven't finished it yet. Now, keep in mind that anytime that you get money in advance of the car being completed, it's a liability to the company because you haven't earned it yet. Legally speaking and according to accounting, if you receive money for a job that hasn't been finished, that money should be held into a liability account until time that you actually complete the job. Now I've created a very easy process to handle this. So what we want to do is we want to write down the RO number, which is 14445, and the amount of 7377.54. And we go up to the memorized transactions, and we'll do this at the end of each month. Or when if you're closing the month, at the various beginning of the following month, then we'll use it then as well. So you'll notice we have a temporary AR transfer. So when we open this up, it shows us business receivables, it shows us year-end adjustments or month-end adjustments. It's got a date. Now, if you're doing this at the end of the month date's going to be there. Now, if we were doing this a few days after the end of the month, we'll have to date it back to the end of the last month. Now, this is the instructions that are listed here. Step 1, date, last of the month. Entry number is going to be AR transacts, which transacts. Let's see, let's put this X here. I'll match it up there so it's the same. Now, there's 2 lines in this thing, transactions. It's that simple. So you're going to put in the amount that is the overpayment or the customer deposit in the debit column. And in this case, it's 7377.54. And we're going to put the RO number, which is the 14445, here, and then we put on the credit to balance it out. And we put the RO number here also. Okay, as you can see, that's all we have to do to actually move it from being in the accounts receivable to the customer deposits or the month-end adjustments. Now, one thing that you keep in mind is that this account is 215010. So when we save this, if you are sure that this car is going to be completed in the following month, then we are going to tell you to go into this transaction and reverse it dated November 1st. So this amount money will be available to be able to apply to the invoice when it's completed. Now, it's very important that you make a good assessment of this. This happens to be a very huge job that somehow, some likelihood that you're not going to even get it done in the following month. Then don't reverse it until you're sure that the car is going to be completed, because we don't want to have to go reverse back and forth each month. So we only want to reverse it one time. So here we got it saved. We got to save and close it. And now, if we go back to the open invoice report, we have a payment and a general journal entry. So we want to be able to apply that payment. And now that's going to be off of our open invoice report. And it's also not going to be a negative number in our accounts receivable, which is going to cause the accounts receivable number to be incorrect. Now, as I was saying earlier, if we go to your chart of accounts, which is Control A, or if you don't remember that, it's chart of accounts right here, Control A. A stands for accounts. We go to 2150, and there's our month-end adjustments. And there's our 73, 77, 54. Now, normally in a month you'll have several in here, but you want to go back to the one that we just did. So we double-click to open it. Now you'll notice there's a reverse button here. What's nice about this is if I hit reverse here, it's automatically going to change the date to the beginning of the following month. So all I really have to do is then to say save and close. So as you can see now, originally we had 73.77 in a liability for that particular job, the money that we received from the customer ahead of time. And now we reversed it, so this balance is back to zero. And that money is now available that when the invoice comes as a credit, we can use it as a credit to actually apply to that invoice. So that's important to do, because in that way you actually keep track of your accounts receivable correctly.